Hey guys, Tiny Bryson here, and over the past 3 months or so, since the entire pandemic, I've invested a little bit over $40,000 or so. However, one of the most popular questions I get all the time is basically, Tommy, should I go out there and basically borrow money to go out there and basically invest more money and then hopefully make that money back and then pay back the loan, but then I get to keep all that profit. And in this video right here, I'm going to break down all the pros and cons of using leverage. I just dropped some money, I'm sorry about that, of using leverage to actually invest money, the pros and cons, and on top of that, I'm going to tell you also what I currently do and how I currently invest and all my thoughts about the subject. On top of that, guys, I also do post videos every single day, so make sure to subscribe to the channel and hit the bell so you're notified every time I post a new video, and also smash the like button. It helps a lot with the algorithm, so thank you guys so much. But the first thing I want to talk about is this, guys, okay? When it comes to leveraging your money and borrowing money to basically go out there and invest, it's very simple, okay? There are several ways to do it. If you want to, you can get a personal loan. You can use a credit card to start investing by taking the money out in cash, a cash advance, or you can borrow money from a friend, or if you want to, you can basically leverage your stocks to basically go out there and invest even more money. You can do this for Robinhood, M1 Finance, a lot of apps out there. However, before I get to all that fancy stuff, I want to get to the nitty ingredients. How you say it? The entire point is I want to get to the pros and cons here. Now, the first thing is this, guys. When it comes to investing into the stock market doesn't care if you're using your money, somebody else's money, or you stole the money. All that really matters is that you're investing money. However, if you do borrow money to invest, then the risk is obviously a lot higher. That's the entire idea here. And because I've been investing a lot of money, and I've told my friends about it, a lot of people ask me all the time, Tommy, well, how much money can I borrow to basically go out there and invest? Because I don't have as much money, and I want to make sure that once the pandemic is over, I can basically get out of the pandemic, but with so much money, I can pay back all the loans, and boom, 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 everything is normal. I made a ton of money, and it sounds so cool, and that's why I want to start off by talking about the pros, okay? The pro is this, guys. Whenever you borrow money and you make more money from it, the idea is you didn't really use your money, and this way you can also borrow more money than you actually have, and you can even make even more money, okay? So the idea of leverage is very enticing, right? But here's the main thing, guys, okay? Here is a real life example. Say, for example, you said to yourself, well, you know what, Tommy, I'm gonna go ahead and borrow $10,000 and buy some AMC stock. Why? Because right now, movie theaters are not open. Thus, they're going to keep going down in price. But once the pandemic is over, bro, I can basically go out there and sell it back and basically make a big profit, pay back the loan, and just call it a day. So say, for example, you bought AMC when it was as low as $2.25 this year. That means you would have bought around 4,444 shares right off the bat. And now, say for example, you sold it or you waited until it went back up to around $7.76, which we did see it go up that high back in February or so. That means, okay guys, whenever you sell your stocks, your 4,444 shares at $7.76, you're going to sell it for around $34,488. So once you're done paying back this loan of $10,000, you still get to keep $24,488 without even using your money in the first place. Now this is called a perfect situation, okay? If you could do this all the time without having a hiccup, you can do this every single day. And it sounds cool because basically you can borrow somebody else's money, make money off of it, pay it back, do it over and over and over again, and it seems enticing. And by the way, I've noticed one thing, guys, okay? Whenever somebody is investing into the stock market, whether that's AMC, Delta, whatever company it is out there you want to invest into, they always take a look at, for example, the history of the price of the company. And they say, hey, you know what? If Delta, or for example, AMC was at $7 like a year ago, it means that it will probably go back up to that price. I can buy it at this price right now, wait a year, and before you know it, boom, 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 I can get my money back. But what they don't notice is this, guys, okay? A company can easily just as well not recover and go all the way to zero, and you can lose all that money. So now that I told you guys the pros, okay, the pro is you get to borrow more money, you can invest it and hopefully make a large profit without even putting in your own money, and then pay it back and then call it a day and do it all over again, right? Sounds cool. However, here are the cons of going out there and borrowing money to actually invest into the stock market. Now, most people don't tell you this, okay? Everyone thinks that, hey, Warren Buffett made around a 2,000,000% return. That's awesome. I'm going to do the exact same thing. But in reality, the average stock market return every single year is around 10%, okay? However, on top of that, you also have to take into account inflation, which is around 3%, which means every single year, your money loses around 3% in value. So, although you might get an average return of 10% if you're lucky and you're smart in the way you invest, guess what happens, guys, okay? If you were to borrow $10,000, the average personal loan interest rate is around 9.41%. So right off the bat, if you're making the average return of the average person out there, you're going to be losing money every single year. However, you know the crazy thing, guys, is that, you know what? Although the average return is 10%, and for example, Warren Buffett makes a lot more money, but a lot of people out there, they go negative every single year. So the main thing about the stock market is that the returns are not guaranteed. But you know what is guaranteed? What's guaranteed are those payments for that loan you took out. So basically, whether you go bankrupt on that entire stock you actually went into, or whether it goes up or down, it doesn't matter because you still have to pay that money back, and the bank doesn't care. No one cares. And by the way, I said the interest loan for a personal loan can go as high as 9.41%, but in reality, it can actually go as high as up to 36%. So imagine borrowing money and hoping it goes up beyond 10%, but then guess what happens? It doesn't. So then you're stuck with these payments and you still have to pay them off. And by the way, if you say, for example, well, you know what? I am not going to pay it, okay? I'm done here. I'm done. Well, you'll go into collections and then they'll ruin your credit score for around 7 years or so. So I'm not trying to scare you off from going out there and leveraging your money to then invest into stocks. What I'm telling you is this, guys. The odds are against you. So in reality, the idea is very, very risky. And although you might say, Tommy, but you only have around 40K invested, I want to invest more money, I don't want to listen to you. The answer is, it's not just my idea. Warren Buffett, a guy with around $70 billion, says the exact same thing. Leverage, although it might sound very cool, it is a double-edged sword, and if you're not careful, you will get cut. And on top of that, if you're not careful, you will get destroyed. There's been a lot of companies, hedge funds, that have fallen because of it, because they leverage way too much. And then once the market goes crazy or is a huge downturn, guess what happens? Well, basically, they go bankrupt, okay? They lose the bulk of their money. So you want to be very careful with how you leverage your money. And if you ask me, honestly, I don't recommend it. It puts a lot of pressure on performance every single month, every single year, when in reality, the stock market is unpredictable. If I can predict it, Warren can predict it, how in the heck are you supposed to predict it? You know what I mean? So it's better to just invest, and then basically use your own money, and then step by step, you can actually just keep growing your money step by step, but not be stuck with debt if it doesn't work out, okay?
It's not something that interests us at all. We are not going to leverage up Berkshire. More high IQ people, really extraordinarily high IQ people, destroyed by leverage. We saw long-term capital management.
And by the way, don't think that if you build up your portfolio organically by putting in your own money, you can't eventually leverage that. In reality, there's a lot of apps out there, for example, M1 Finance, Wealthfront, that basically lets you borrow money against your portfolio. So eventually, once you have a hefty portfolio, you can go ahead and borrow money against your portfolio at a very low rate of around 2% or 3.5%. And use the money to basically go ahead and invest into real estate if you want to, but the risk is kind of like mediated, and that way you can actually do it better if you ask me. But again, the risk is still there. So if you want to build a portfolio and borrow money against it, you can eventually with M1 Finance, or for example, even Wealthfront, okay? And they charge very low rates if you want to. But I am not against you actually borrowing money to learn more about investing. So if you want to borrow money like $20, $30 to go buy some books about investing, by the way, I have a video on that, link down below. But my favorite book about investing is called The Intelligent Investor by Benjamin Graham. It will help you out a ton. But if you want to borrow money to do that, you can if you want to, like $30, $100, but don't be that guy that basically buys a course for $5,000, $10,000 and then basically can't pay back, and now he's in debt and he doesn't know what to do, okay? don't invest into those crazy courses, okay? Just start small and then just keep learning step by step. That is my advice. And on top of that, if you're frustrated because basically you don't have a lot of money and you're like, hey, Tommy, I just can't invest like $10 every single month. The answer is it might be time to just go out there and upgrade your skills, okay? Your skills are very important. So go out there, invest in your skills first and get a better job, better career. And that way you'll have more money to actually invest, and also limit your expenses. And that way you also have extra money every single month after you're done paying off all the bills, okay? Now, number 3 is this. Tommy, well, if I shouldn't leverage money or borrow money to go ahead and invest in the stock market, then in actuality, what should I do? And on top of that, what exactly are you doing? Although you might hear me say, hey guys, I invested over 40K in the past 3 months or so. In reality, I didn't start like that whatsoever. I started back in December of 2018, and I didn't start with 10,000 and 40K. I started with like $7.78 with the app called Acorns, okay? I started very small, and my commitment was every single month I want to invest $500. And the only time when I basically invested more money is right now, because basically everything is on discount, so I'm going to be buying a lot more. But the idea has always been this, okay guys? I always recommend, if you do have a job, and when you do get a job after everything is done here, I recommend always take a minimum of 10% of your salary or whatever you're getting paid as, and basically invest that money. So for example, if you are getting paid $1,000 per week, take 10% of that, which is $100, and put it into the market, into the investments that you want to make. And by the way, if you don't know if you want to be a passive investor, for example, an active investor, I have a video about that. But the answer is, I recommend for people who just want to have their money grow step by step over a long period of time, I recommend Acorns. And that way, your money is diversified into ETFs, and that way you can have an average return, but not have to carry that much risk every single year. And by the way, if you're wondering, Tommy, but you know, investing $500 over the next 40 years or so, that's not going to be a lot of money. And in reality, guys, I think most people think like, hey, I need a ton of money to get started investing, but in reality, you don't, okay? Because, you know, although all I'm doing is investing $500 every single month for the next, like, for example, like 40 years or so, if I am making an average return of 7% after inflation plus 2.35% in dividends, because I also do reinvest my dividends, guess what's going to happen, guys, okay? If I'm getting 9.35% as a return every single year, and I invest $6K every single year on top of my $40K I already have, well, guess what? In the next 40 years, I'm going to have around $3.8 million. And that amount of money is going to pay me in dividends around $90,000 every single year. So the idea is, by getting started investing step by step every single month, for example, with Acorns, that money will eventually keep growing and growing and growing. And remember, guys, okay? I just said to you, okay, I'm only using around 10% or 5% to actually do this every single month of my income. So the idea is, I still have another 90 or 95% to put it, for example, into real estate or into more stocks that I want to invest into or into starting a business. The idea is, I still have a ton of extra money to go out there and basically invest even more money and get even more money, right? So the idea is, I always recommend you do dripped investing. So every time you get paid, take $100 and invest that money. And over time, that money will begin to basically grow into more money and compound over and over again. And that will be a lot of money in the long run. However, if you want to invest more to make more money right now actively in the short term, I recommend read The Intelligent Investor by Benjamin Graham, learn how to analyze companies, and this way you'll know exactly what price to buy at, what price not to buy at, and that way you can make a lot of extra money. Now, who did this? Warren Buffett did this, okay? So it's a perfect example to actually go out there and do it also. But guys, comment down below and let me know, what do you guys think? Are you guys convinced, or do you guys still think you should go out there and borrow 10K to go out there and invest in the market with no actual guarantee? Comment down below. Let me know. And as always, if you enjoyed this video right here, well, like this video. On top of that, also subscribe to the channel and hit the bell so you're notified every time I post a video. And also, I have a brand new channel called The Tommy Bryson Show, and it is hilarious, so check it out. Link down below. It's a lot of fun over there, guys. On top of that, follow me on Instagram, Tommy Bryson. And before I go, if you want to watch another video about how investing works and types of investors, watch this video right here. And also my face right here, and I'll see you guys tomorrow. Thanks for watching, and as always, peace.